Hey friends, welcome to Smart Money Experts. On this channel you will get the hottest stocks tips and alerts to trade in the direction of the smart money institutions and influencers. If this sounds good to you, please hit that like and subscribe button with bell notification turn on to all, so you don't miss out on the hottest trending stocks alert and miss out on some serious gains. But before we begin, please know I am not a financial advisor. I'm just a virtual computer program to give you the best stock tips for you to do your own research. The channel's material is only for education and entertainment purposes only. Alright, let's get this money. Here we go. These are the top 3 stocks pick from the top influencers with over 100,000 subscribers on their channel. If you want the full video to these stocks picks, the links to their channel will be in the descriptions. Let's get this money. The first stocks pick is from Keenan Grace, with 122,000 subscribers on his channel.
So now, let's get to it. It turns out that after NEO Day was actually such a success, contrary to other people that you're listening to. NEO Day was such a success that it encouraged banks to up their price target significantly. So let's start off with this. What's the new price target for Deutsche Bank? $70. What's the new price target for Credit Suisse? $71. What's the new price target for JP Morgan? $75. This is short term. And last but not least, what is the price target for Daiwa Securities? $100 a share. And this is the first official triple digit price target on NEO. The first official from an official organization. This is the first official triple digit price target on NEO. And this is a short term price target.
Thank you, Keenan, for our first stock picks on our list. Let's now go on to the second stock picks. Next, here we have another top influencer, George Perez, and he has 113,000 subscribers on his channel. Again, the link to his channel will be in the descriptions. Now let's get this money.
So my first pick is a company that is literally flying under the radar and that I haven't really seen anybody else talking about, yet they have a tremendous opportunity ahead of themselves because they are setting out to disrupt the more than $4 trillion healthcare industry, which is in fact one of the last multi-trillion-dollar industries that has yet to be really disrupted, but that's all about to change. And that company is Hims & Hers, who will be going public through a reverse merger, otherwise known as a SPAC, with Oaktree Acquisition Corp, ticker symbol OAC. Now SPACs have absolutely blown up in popularity over the past year, and understandably so, because essentially they enable us as retail investors to be able to invest into companies at the very early stages. So now what makes this company so special? Well, if you know anything about the US healthcare system, then you know that it is unquestionably broken. Not only is it antiquated, but it is inefficient, expensive, and simply out of reach for literally millions of Americans. In fact, a multitude of studies have found that more than 1/3 of Americans either have no health insurance whatsoever or inadequate health insurance. And then to top it all off, even if you do have good health insurance, you often have to wait up to 2 to 4 weeks just to get an appointment. Then when you finally get to the doctor's office, and that's if you haven't already died yet, at which point then they make you wait an additional hour or 2, even though you showed up on time. And just in case you haven't enjoyed your experience enough, you have to pay a copay before even being allowed in, which is on top of the already outrageous premiums that you're paying every single month. You gots to be with me. But that's unfortunately the reality that we live in today, and that's where Hims comes in, who basically said, "F that outdated system. We can and will do better. Need an appointment? Sure, a doctor will see you in minutes. Don't have health insurance? No worries. It only costs $39 to see a primary care doctor. Need a prescription? We'll ship it directly to your house. Or it'll be available to pick up same day at your local pharmacy," because Hims is a telehealth company that is modernizing the accessibility and deliverability of healthcare through technology, because all of this was done through your phone and you never even had to leave your house.
I'm just a big toasty cinnamon bun. I never want to leave this bed.
And as Cathie Wood from ARK Invest often says, innovation is accelerated during times of crisis, and that is exactly what happened last year as the telehealth sector absolutely exploded in popularity due to necessity. But here's the thing, despite this massive growth, this is an industry that is still in its very early infancy stage, even more so than the electric vehicle market itself. And trust me, there is a reason why Cathie Wood, who was able to identify and invest into Tesla all the way back in 2014 has now made Teladoc, which is currently the biggest telehealth provider in the world, one of their largest positions by far across the majority of all of their ETFs, and why Teladoc now demands a market cap of over $30 billion. But now here's where things start to get really interesting. You see, it took Teladoc over 13 long years, more than a whole decade, to power their first 1 million consultations, while the HIMSS platform has accomplished that very same feat of powering over 1 million consultations within just their very first year of being in business. And in 2 years, they've now already powered more than 2 million consultations, which is just incredible, and there's simply no other way to put it. Their growth has been absolutely parabolic, and mark my words, they're just getting started.
Thank you, George, for our second stock picks on our list. Let's now go on to the final stock picks of the day. Finally, here we have another top influencer, Charlie Chang, and he has 253,000 subscribers on his channel. Again, the link to his channel will be in the descriptions. Now let's get this money.
The third stock on my list is Opendoor, stock ticker OPEN. This is an online real estate company that has a really interesting business model. Being in real estate myself, I feel like I have a solid understanding of market disruptors, and Opendoor is definitely doing that. They allow people to sell their homes as is, then they basically flip it and sell it for a profit. When done at scale, this can make a lot of money. So right now, Opendoor is trading at $25.18 with a 52-week low of $10.55 and a 52-week high of $32.39. If we take a look at their price chart, we can see that their stock has been fluctuating in price a lot, but right now it is trading under its all-time highs. They have a market cap of $13.709 billion, and we don't have enough data to know their PE ratio or earnings per share. They are not yet profitable, and we see a profit margin of negative 8.1%. They have total cash of about $550 million, and they have a very great current ratio of 5.16. Now, we have very little data from analysts, but right now the rating is at 1.7, meaning it is a buy. And the average analyst price target is $32.50, which is quite a bit higher than the current price of $25.18. So Opendoor's SPAC merger closed on December 17th, so it is a very new stock that is trading under its highs. Right now, quarter four stats have not yet been released yet, but we do have some information about the company's revenue. In 2019, they brought in $4.7 billion in revenue, although that did decrease substantially in 2020 due to the pandemic. Now, they are not yet profitable, but once their frictionless business model picks up steam, I think profits will be plenty. Their sophisticated algorithms allow Opendoor to really be spot on with their home analyses, knowing exactly how much profit is in each deal based on all the factors like buy price, renovation costs, and more. It's also priced relatively cheap compared to some of the other big real estate internet companies like Zillow and Redfin. Now they are applying e-commerce and tech to the real estate buying and selling process, which I believe is a big disruptor in a very traditional industry. Overall, I think the stock is better for people with some short-term risk, but in the long term, I think Opendoor will do very well with its share price. And that is why I'm adding more of it into my portfolio.